Hey everybody, welcome back to the channel. Today we're talking about Zoom. Zoom and Cathie Wood's stock, which is like her second biggest holding in the ARK Innovation Fund right now. It's struggling a little bit. It's down about 14% at about $83 right now. I think ARK's average is somewhere at like in the 150s to 200s. It's a bit higher because they were buying a bit heavy during the pandemic. Zoom came out with earnings yesterday. Zoom pares back annual forecast as revenue growth slows to the single digits. Now, before we get into this, one of the reasons that Cathie Wood is so bullish on Zoom is because of their growth rate. They were able to put up about $1 billion of revenue per quarter, whereas in 2019, they put 621 million on the whole year. So it's just an explosive growth rate. Obviously, the pandemic hyper accelerated their ability to be able to grow that quickly. But nonetheless, I mean, putting up $1 billion a quarter in a world in which you have Google Meets and Microsoft Teams, and you have all these different competitors, FaceTime going down your throat. You have built just a successful competitive product that can stand by itself in the marketplace, in the enterprise communications space, all those different avenues, and be successful. Cathie Wood imagines Zoom as one of those stocks that can overtake a $4 trillion market opportunity that is communications, specifically for digital workers and knowledge creators over the next 10, 20 years. And she believes that Zoom is simply the best product that is out there. Well, in order for Zoom to be the winner that she thinks it can be, which is a 12x return, a base case of around $1,200 by 2026, which is her estimate, and a bull case of $2,000. Right now, the stock's at $83. Then it has to grow. And Zoom's revenue growth slowed to 8% from 12% in the year-ago quarter, a lesser result than analysts had expected, which got the stock down about 14%. So Zoom shares fell about 9% in extended trading hours on Monday after the video calling software pared back its full forecast for revenue. Now, earnings, they beat $1.05 per share versus 94 cents per share, but revenue, they had a slight miss, 1.1 billion on 1.112. Now, that necessarily isn't enough to tank a stock 14%. What happened is their guidance, and when you guide for lower growth, that means the company or analysts can expect that you're not going to grow as strong as you're going to be able to grow. Zoom's revenue in the second fiscal quarter grew 8% year over year, slowing from 12% in the prior quarter. The second fiscal quarter ended on July 31st. Their net income fell to 45.7 million in the quarter from 316 million in the year ago quarter as the company increased spending on sales and marketing. So to go from 316 to 45, it's obviously a big drop. Now, if you're spending on sales and marketing, it means you want to grow. But if you're going to lose that much net income in order to grow and you're not growing, that is the fundamental problem that exists when it comes to Zoom. The strong US dollar performance in the company's online business and sales that got weighted towards the end of the quarter negatively impacted revenue. Kelly Steckelberg, Zoom's finance chief, said in the statement, "We have implemented initiatives focused on driving new online subscriptions, which have shown early promise, but were not enough to overcome the macro dynamics in the quarter," basically blaming the stuff that happened in the recession. I pay for a Zoom subscription about $15 a month because I use Zoom extensively. And the way they got me was that I was tired of having like 40-minute Zoom calls. I needed to have longer than 40-minute Zoom calls. So because I use Zoom a lot, so I ended up paying for the subscription. I'm assuming it's harder to find people that have that extra $15 a month to just dump into Zoom or even in the enterprise communication space, given what's going on in the macro economy. The company said at the end of the quarter it had about 204,000 enterprise customers, which is pretty phenomenal. But this is up less than 3% from 198,000 3 months earlier. So they're only growing enterprise communications, which is the massive market opportunity that Cathie sees, only 3%. And their enterprise communication customers deliver 54% of the total revenue. So more than half of your revenue is from the clientele base that's only growing 3% or less than 3%, which is not the best for growth. With respect to guidance, Zoom called for adjusted fiscal third quarter earnings of 82 cents per share to 83 on revenue of 1.095 to 1.1 billion. So there's not going to be any quarter-to-quarter growth in revenue. It's going to be relatively flat. Analysts were looking for 91 cents and 1.15 billion in revenue, and if they can't, project that, then that's going to be a little bit rough. A quote from the CFO: "As the majority of our revenue has shifted back to the enterprise and we have moved beyond the pandemic buying patterns, we are returning to more normalized enterprise sales cycles with linearity weighted towards the back end of the quarter." When they mean linearity, that is not the same as exponential growth. And this is the thesis, or this is the problem I always had with Cathie's thesis, which is if you say Zoom's going to be a $1,500 or $1,200 stock by 2026, then that means there has to be exponential growth. And at the end of the day, if the CFO is saying, hey, it's a linear cycle, there's no real catalyst we see to have this monumental growth unless we have another global pandemic and everything shuts down, which is probably not going to happen, then where do you get these numbers to the point where I think they said Zoom is going to put up like 45 billion in revenue by 2026 or 70 billion on the bull case? It's like, how does that happen? Where does that come from? Who gives you that much revenue in a world in which there are competitors? There are other alternatives to Zoom. Not everyone has to do this. You do not have a monopoly on the space. Even if you have the best product, that doesn't mean you're always going to win, because Microsoft can just bundle in Teams with everything else they're selling, and then boom, they have distribution of their product across the entire world. It's difficult. It's really difficult to understand Cathie's thesis here. And with the CFO saying, hey, this is a linear cycle of growth, not an exponential one, well, that also, it makes you question the thesis. The company expects the online business to be down 7 to 8% in the full fiscal year, compared with the forecast for no growth in that part of the business. Zoom has changed in spending expectations for the second half to prioritize areas with a high ROI, such as research and development and sales operation. Greg Toombs, Zoom specialist and a former Google Cloud executive, said, I think we're a little too nice in how we sell our product from a discounting perspective. So I think we got the ability to be a little bit smart on how we price and discount our products, which makes sense given that Microsoft, discounts the crap out of their product to sell it with other stuff. So Zoom can have a little bit more strategy there in terms of ultimately how they sell their product. They also announced a new pricing structure called Zoom One, and said it had agreed to acquire conversationally artificial intelligence software startup Slavi, and that ultimately allows it to have a better sort of subscription model. Apple has the Apple One subscription model, where you get Apple Music, Apple Health, Apple Plus TV, all this stuff for like $30 a month, which is a pretty decent deal, or $20 a month. And it makes you question, why would you pay $10 a month for just Spotify when you're getting, everything else from something like an Apple? So overall, my thoughts on this. Zoom shares have fallen 47% this year. Cathie Wood has bought it. I think she has like 9 million shares or something like that. I do not see the crazy growth potential that Zoom has. Now, maybe I am wrong, and in the next couple of years, Zoom does well. The question is it going to do $1,200, $1,500 well, which is what Cathie has open source this GitHub model of like understanding the way Zoom operates. I personally don't see that happening. And, because I don't see that happening, it's harder for me to come to the conclusion that, okay, Zoom's going to be the next 10 bagger by 2026. Because if she's right about this, and all of us here that have not invested in Zoom don't invest in Zoom, and it turns out to be a 15x, then we made a horrible decision from an opportunity cost. If you could have invested in this one thing that is going to 15x in the next 4 years and you didn't do that, it is very unlikely there are other stocks that are going to 15x, or the index that's going to 15x in the next 4 years. It's just a question of the probability of that happening, and it seems a little bit low given they're not growing exponentially anymore. So those are my thoughts. Let me know what you guys think. Thank you for listening and watching, and let me know what you think about Zoom.